Hello and welcome to Crux Investor. We caught up earlier today with Marc Henderson. He is the CEO of Laramide Resources, ASX listed uranium junior, assets in US and also Australia. Really frank conversation with him about the state of play, supply demand, what they're doing at their assets, how much money they're spending, and their plans for this year. Always enjoy speaking to Marc. I think you might enjoy listening to it. So if you want our thoughts and opinions on the conversation, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis. There's commentary from experts from around the world on a variety of commodities, including our weekly uranium show, been running now for 50 weeks. There are training courses on there to help you with your diligence. There are summaries of interviews that we've done to save you some time because you've told us that you're busy. And not like that, though. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other, do join them at cruxinvestor.com/club. I think you might like it. And we'd love your feedback too. So give us a like, leave your comments below. We'll get back to all of you. And if you want to see precisely what we talked about today with Marc, take a look in the description below. Marc, how you doing, sir?
Very good, Matt. How are you?
Not too bad. Yeah, good to see you. Nearly a year. April last year it was. How have you been keeping?
Very well. It's been obviously an interesting and challenging year in a lot of ways, but we're still here. So that's the number one thing. As Keith Richards says, nice to be here, nice to be anywhere.
Exactly. So where in the world are you hiding out?
I am in or near Sarasota, Florida.
Okay, fantastic. Not a bad part of the world to be hanging out during the summer. So
it's a good place to avoid COVID sort of Canadian overkill on the situation. It's much different. It's much different here than it is in Canada, I have to tell you.
In what way?
In terms of on the ground. Just the attitude about where we are in this dilemma.
Well, I said, because I always get COVID updates from all around the world, right? So I mentioned I got one from Jakarta this morning, but I'm always interested in the way that people on the ground treat it, because obviously your governor your senator has got a very sort of strong views on how you guys should be dealing with it.
Well, there were more like in the UK, where the UK is now. I know because I have kids that live in the UK. And so that we're dealing with that lockdown and the quarantines and all that kind of thing. I mean, I think there's more of a personal responsibility attitude here, and they really never closed anything down. But there's a misperception around everything's a Yahoo. I mean, you come down here and people up in Canada would say, "Oh, no one's wearing masks and everything else." Everyone's wearing masks in the settings where you'd expect them to wear masks. And to me, the numbers, if you look at all the charts, they're tracking pretty much everywhere globally on whatever wave we're in now. It's just the attitude's much more A, can do, let's get on with it. And B, you can see sort of in real time the effect of how this economy can come ripping back when they allow it to. I mean, in terms of traffic and can you get a hotel room anywhere, or the restaurants are full. Like, this isn't going to be whatever they were telling you at the Federal Reserve about how long it's going to take to create inflation. I'm taking the over on that it's going to be pretty quickly. Which is good for real assets. I mean, we obviously have a company that's a reflation potential asset, commodity type asset. You've seen them all go up. So it's an interesting firsthand observation around things. I don't know what it's like in the other states in America. I don't want to speak for this one, but I know it's not like that. I know it's not like that in Toronto now.
Yeah, it's interesting times to see as we're kind of. Do you know what? I'm going to stay away from the COVID conversation. What do I know? What do I know? But that's interesting. Thank you for that. We are here to talk about you, Laramide. Okay, so why don't we kick off first of all that obligatory 1 minute overview, and then I'll pick it up with some questions.
Yeah. So we've obviously got the same suite of projects that we think are an important part of the future supply piece. We think they're in the first tier. U.S. and Australia. They're ticking along a little bit closer to where they'll be kind of shovel ready and ready to go when we get a market. What hasn't advanced since the last time we talked, and I was pretty enthusiastic when we were there in April, because I could see the market was telling you more the spot market was telling you that maybe the turn is here, and then that sort of rallied up and went through the 30s, and now here we are at 27. But the equities now are really telling you that this is for real, and the number of people climbing on board now, and the sort of people climbing on board, the Bill Gates and some of that thing you're seeing, some of that thing with the ESG crowd sort of saying, well, maybe nuclear is going to be okay. Maybe we should think about it some more. All that kind of stuff has happened in the last year. I mean, the equities have obviously, I think across the board, have probably done better. But at $27, no one's building a uranium mine. I mean, Cameco's got Cigar Lake closed, and it's obviously partly closed because of the pandemic situation. But it tightens the market, and the market needs to get tighter before you can bring on supply, especially chunky supply. Like, that's the thing people also they're in that space need to realize is Saskatchewan stuff is chunky supply, so it doesn't come on about 1 million pounds at a time. But our stuff is in good shape. We're getting permits. We plan to do, last year was challenging in terms of getting work done. We've got a big work program planned this year in Australia, particularly in the Northern Territory, which will be exciting. It'll be the first time that thing's been drilled, but certainly by us. And we should be getting on the ground in New Mexico as well, which whereas last year was very challenging to get permits, very challenging to get government responsiveness on routine things. Can't speak for what it's like in other jurisdictions, but certainly, I mean, if you follow what's happening in Australia, obviously that was a country that was incredibly careful around people moving around, certainly allowing people even into the country. I certainly can't go there. I couldn't go there. I can't remember if I could go there the last time I talked to you. I still can't go there. I couldn't just pick up the phone and call the airline and fly in for any reason, really. And so, there's still some headwinds about getting work done on the ground.
Yeah, it's interesting. And I do want to talk to you about the kind of global narrative, the macro narrative, but I was interested in the way that you kind of framed it when you first mentioned your projects. You said, they're in the same place. And I wonder if that's a kind of, and the intonation too, I wonder if that's a clue as to how you're approaching this. I mean, some companies come in and talk to us about how much work they're doing, and it's all going to be great. How are you tackling your projects, your two main projects?
Well, we've got two major projects. Both each have 50 million plus pounds. So they're big, chunky projects that are going to run for 10 years or more at scale. Interesting enough to be interesting, certainly to the market, and also interesting to the utilities. One in the U.S. ultimately, probably what we know now, top could be 3 million pounds a year. The other in Australia could be 5. And so, they have to be brought into the market relatively carefully, but the one that's 1 million can come in 1 million pounds a year with relatively low CapEx and OpEx to start. So we obviously want to focus on that because that gives you a bit of flexibility. It's a bit like they talk about shale, how they can flex it up and down. ISR is a bit like that. That's kind of the flex in the system to the extent there is flex in the system. And I suppose if the Kazakhs operated that way where they flexed up and down on various projects, they have that ability to do that as opposed to the project in Australia, which is a big open pit mine. You obviously have to build it. Once you get visibility on building it, it's going to hit the market at a certain period of time. And we've got permit challenges and political challenges and all that around that as well. But the number one thing is that until you really see the price signal up and sustainable, I would think at least I said 40 before, probably really $45. It's hard to get moving aggressively in terms of let's raise tens of millions of dollars, put the team together, talk about getting contracts in place for actually building anything, because it's just, you can't, there's no way you can't produce uranium. Nobody can, I don't believe, at 27 other than Cameco's and Kazakhstan's projects that are depreciated already effectively, or somewhat depreciated.
Okay, but look, I don't want to talk about what could be. What I'm interested in is your attitude over the last year, right? Obviously, COVID's kind of restricted your ability to travel, get feet on the ground, as it were. But your attitude towards money and spending money on projects which, at these prices, don't work, and in this environment, seems kind of pointless. No,
100%. So we weren't going to go out and do a lot of, now the market conditions, capital markets have gotten a lot healthier where we could have been raising money for the last 4 months, at all. And we've been bid every, week, would you do something at 25 cents, 35 cents? No, we're not going to do that. We're not going to, make no sense. It's basically, dilutionary to NAV. I think people that run these companies need to run them on a NAV per share basis, not NAV. Too many of the companies in the resource space are basically run on NAV, and no one cares too much about their shareholders because for the most part, most people aren't big shareholders in these companies. I'm a big shareholder in the company, so I'm 10% shareholder. And I also saw the last cycle, and I know how powerful this is once it gets started. And I also know we're one of a very few companies that have development assets that are plausibly going to be part of the future production, in uranium. And so this isn't a 50% upside, 100% upside. This is 2x, 5x, 10x. And I think the kind of shareholders I want to attract are those shareholders. And, I think our register right now is slowly but surely, we just keep adding more of those shareholders because it's been such a long time. And the thesis in this uranium space is such a slow build thing to get to this moment, that, I'm pretty comfortable of how it's going to unfold because I've seen it happen before.
But this interests me because you've seen a bunch of uranium companies take the opportunity to go and raise some capital, right? Because they've seen 2-3 times growth in their share price through, I guess, a sort of surge of interest from generalist retail investors. It's kind of like this whole kind of like, GameStop mentality. It's like people have heard a story, don't quite understand. Don't understand a lot of the moving parts. But momentum has driven them in here. So money's just got cheaper for those guys. And you're saying you're still uncomfortable to raise money in that environment because you were like 28 cents when we spoke, I think, back in April, 38 cents now. So you haven't kind of seen a massive growth spurt there. Do you think your strategy of not over promoting this is worked, or do you think you're playing the long term game?
I think it will work. Ultimately, I do confess that we have lagged some of the peer groups. So that's the pressure you get. So what you're referring to earlier about, because there's a mindset of take the money. And the other thing is once you take the money, there's pressure about, well, what's the news flow? Well, if the news flow is you just drilled a bunch more holes and added pounds when you already had a project that didn't need any more pounds, I sort of don't get it. But for whatever reason, the market, whether it's the algos that need to feed off it or whatever the market trades now, there's an element of that goes on. The other thing that we got a bit unlucky is we knew about this URA rebalance, which people in this, it's kind of inside baseball for these uranium people who are following uranium. But they were a 10% shareholder of ours in URA before, and so when they decided they were scared about being in uranium, had to get into something else. This wasn't that long ago. I'm thinking 2 years ago, maybe 3 years ago. They kicked all the juniors out. We sort of arranged to find buyers for their 10%. And then lo and behold, the space is getting hot. They see fund flows. They're putting all these people back in the space. And we would have made then they announced how they were going to do it. We would have made the cut, but for, believe it or not, the market cap thing, which is the free float. And because I own too much stock, I wasn't counted in the free float and we didn't get in URA, but that would have added, 10 million shares, and they have to add it all at once. So everybody kind of got a pop off that. So some of these names have had a bit of an artificial pop off that rebalance in that single ETF. And we've been in the ETF before. So it's kind of a one-shot thing. Once you're in, it's great. Flows are coming in, but it works both ways. When they were flowing out, it wasn't so fun in a down market. And so I get the feeling that because of the nature of the asset, eventually if you get too disconnected from your peer group in terms of value, wherever you want to have that metric, the market has a way of catching up. It's not necessarily efficient overnight, but I'm not worried about it because when we do come to raise capital, by the time we're ready, we'll be within some kind of range of what we consider acceptable as far as raising money. The other thing for Matt, is about raising money is we have because of the finance we've done in the past, we have an enormous amount of warrant overhang, and we're sort of trying to burn off the warrant overhang because it's out there one way or the other. Yeah.
So well, tell me about that. Is a question I want to get. Let's deal with it now. So, are you going to be able to burn it off?
Well, we think so. The first warrants start coming off in 2-3 months, and they're right around where the stock is now. They're virtually all either at the money or in the money. Some of them can be squeezed. And if they don't, well, the beautiful thing is if they don't burn off, then there's no overhang, and then there's less dilution, less NAV per share impact. Right. So the money's the same. All the money's fungible. So this particular money being offered by one individual right now, and they always tell you we have the greatest shareholders, but they always want a warrant. These fantastic shareholders always want a warrant.
Yeah.
So
it's interesting the choices you CEO need to make, and I'm encouraged when companies can do deals without warrants because it says something very positive, and when they do raise money, that they're not doing it at a significant discount to where they are today, for sure. So do you think you've got the right types of shareholders in there now? Because you're going to have to take a slightly longer view. Everyone talks the long game, the macro, supply, demand, fundamentals. Everyone talks that game, but the reality is that the people coming in there also want the ability for short-term gain should they choose at their election. So it's a very different type of mentality. So have you got the right type of shareholders?
Oh, no, I think we do. And the thing that gives me thing that gives me confidence is because I've seen the market before. I think we can all agree, and I can't imagine you've had any guests on, whether they're CEOs or people that are experts in the space, that think this supply-demand situation is going to be resolved by anything other than the price going up. No one is coming on and saying, no, the price is going to be $15. You should raise money now. And so I'm pretty comfortable that the tide is coming in, and it's a serious tide that's coming in. And so I'm pretty comfortable that we'll be able to get money at some level. And I don't think it's that wild of a bet to think it's going to be at a better level than now.
No, I don't think it is.
Yeah.
So let's talk about your view of timing, because, again, there's going to be a lot of generalists watching this too, right? Perhaps not paying necessary attention to some of the moving parts, or variables, the players. So you mentioned the Cameco's and Kazatomproms, going offline. That's, affecting the supply side of the story significant. We've had all of the kind of American fun and games with 232 and RSAs and new governments and so forth. All of those moments which didn't make a damn bit of difference. And even you thought last year was the year, right?
Well, I think it was the year, but I can't roll back the tape, but if I recall, and this is my attitude, I can't imagine I really changed my mind too much. No, those political developments are important and potentially sort of upside catalysts, but they're sort of asymmetric that, it might not happen. And if it does, it's very good, but you can't invest a whole lot of time and energy into them because by and large, it tends to be a lot of noise, and there's a lot of things governments say they're going to do. There's no follow through. Watching the policy, as you can imagine, getting discussed and made is something to best avoided for small children and that kind of thing. I mean, we're members of the UPA, which is uranium producers, so we had a front row seat and all that. Obviously, there's those lobbying going on. You can go to Congress and meet all the folks that are voting on the thing, on the in the committees and things like that. And no, I think I said it would have been a nice situation, and I applauded Marc for doing what he did on 232, and 232 did ultimately really end up in the uranium reserve, which of course here we sit today a year later, and that could be great, but what is it exactly? What are the implementation protocols and stuff like that? So yes, being in that, it impacts us potentially, and so I'm rooting for it, but I'm not hanging my hat on it.
It's interesting, actually. I was talking to Marc earlier this week, and the numbers turned out to be proposed number $75 million, right? Not a whole hill of beans in the context of how many hands are being put out trying to grab some dollars. So it feels like that perhaps was a fruitless exercise and a pointless exercise. When you look back, do you think maybe we just shouldn't have done that, or do you think it's actually?
No, I wouldn't agree. I wouldn't agree with that, man. I'll tell you why. Just partly because, if nothing else, that certainly elevated the critical supply situation, and now people are looking at it in a lot of other commodities. So I think that was the leader in the elevating that conversation for number one. We still don't know what it's going to be. I mean, it's still disappointing at 75, maybe, but I mean, originally it was supposed to be 1.5 for 10 years. It was supposed to go in and stay in. And, again, it's more inside baseball with the way they make legislation and exactly what the wording is and everything else, and whether it's an appropriation that's a recurring one or whether they have to go back every year. And so I do think it was a very useful thing. And I think the things like what's coming out of it with Bill Gates and talking about nuclear and talking about the need to keep the nuclear plants open. So I think it improved increase the level of conversation about nuclear and the role it fills in American energy generation in a fairly meaningful way. So I think it was, if nothing else, for that reason alone, it was definitely a worthwhile exercise. Okay,
so and just to be clear, so I think maybe lost you a bit there. We were talking about $150 million for 10 years. 1.5 billion was the number originally being mooted, right? And a lot of equity players off the back of that were doing a heck of a lot of promoting to their shareholders and new shareholders about where they sat in the mix. And the reality is obviously being borne out to be somewhat different because no money's been allocated anywhere. So the last year has been about survival mode for a lot of people, right? And talking a good game. But the reality is not much has changed on the ground.
No, I'd say very little has changed on the ground. I mean, really almost since Fukushima, because you get in a bear market this bad. I mean, yeah, almost 10 years, but for, a couple of outliers in Saskatchewan in terms of discoveries, and you have to applaud those people for looking when in the face of a bear market. What really new projects are there, on the horizon? And none of the other projects by and large got materially bigger during the 10 years and so there's obviously dilution against all that asset base. And so, yeah, I mean, you really do have to wait for the price signal. And but it's an unusual market in that the people that were in it, that were going through it all along, at moments in time, it did look like, really in 2017, it must turn because of this, that, and that, and mines are shutting off. And eventually it will. I think it's surprising to everybody how long it has taken, but I think people are going to be surprised how crazy it'll be on the other side of it, because most markets shouldn't work this way. I mean, most people that are in industries that require critical materials in order to basically stay in business, you would think would have a procurement strategy that wouldn't be the one that the utilities have in this business. It seems an odd strategy to me. And I guess they get away with it because the fuel cost as a portion of their business is such a tiny part of it. And they're all in it together. So if they all make a mistake, they don't all get fired. Like all fund managers don't get fired in a bear market because they're all going down at the same rate together. It's kind of that mentality. And when it flips, it goes the other way. And they'll all pay $45 when they were paying $35 3 weeks before.
Yeah, it's interesting psychology or behavioral psychology there.
Yeah,
but let's just talk about. We'll talk about where it's going in a second, but just stick on this where we are today thing. So there have been some successes. I'm thinking of the ISO Energies, Next Gen, whatever you think of the way they're displaying the numbers. These are good discovery assets, and but for a whole bunch of others, this is just being nothing's changed on the ground. There's a big kind of promote. A newsletter type marketing going on out there to just, I guess, let's say survive. But do you think there's going to be a need for consolidation? Because at some point those stories are going to fall over because the fundamentals of the projects don't necessarily stack up.
Yeah, no, I'd forgotten about ISOs. That was a very good discovery, and that's obviously a very good, very excellent exploration group. The problem with the M&A thing is you only really I really do think there's only really 20 names, and all the projects kind of consolidated inside those 20 names. Remember, we had a crazy cycle where there were 700, and so you winnowed that down over time, and many of those companies went off and did other things, whether it's gold or marijuana or whatever the thematic of the day is at the moment. They're changing all the time now. AI. You see a few new ones creeping back, but the people that are creeping back, creating new companies, are the people that knew where whatever assets that are left that weren't consolidated in all the other 20 names are. And so that's kind of what's happened. The main reason I don't think and I get this question a lot about this M&A thing is, in gold, there's a lot of buyers. There's a lot of natural buyers. You can create a mid-tier, you get benefit to do that. You got guys that are producing and near producing, which makes sense. You marry the present and the future. The problem with the uranium space is a lot of us look like us. We got development projects and we have two. Which one goes first? You put another two from another company in there. Now you got four. How does that really help you? So show me the synergy. So I think there's an element of that. You could see a little maybe in even putting ISR producers together. But again, there's very little operating synergy because most of the cost is at the geographical location. And the head office costs in these companies, frankly, shouldn't be that high, especially when they're not doing much. So yeah, it's hard to see it. And you don't have, you have Cameco, and who else is a buyer really that has market cap? Maybe Energy Fuels, now they have market cap. So, but by and large, you don't have guys with big market cap. In Kazakhstan, it's hard to see Kazakhstan going outside of Kazakhstan. I'm not even sure they're allowed to.
They're not.
Yeah,
they're not.
Yeah.
No, but I'm always interested in the approach to the management team, because the decisions you make drive the business's ability to grow or not, or create value or not, right? So if I look at a Bill Sheriff, what he did in the last cycle, he just put together a whole bunch of assets, bundled them up, sold $1.8 billion. Not one of those assets ever got into production, right? But there's nothing wrong with it. I'm not criticizing. I'm saying that's a model. There's a stack of money made for shareholders.
Yeah.
But the fundamentals just weren't there. And, I see him starting to do the same sort of play at the moment. And we wonder if he is, because he's rolling up ISR projects, got, Paul Goranson on board, very credible and capable individual on the ISR front. And, it looks like that's kind of, a cookie cutter step and repeat process for them. And again, market wise, fine. But utility buyers are looking to form relationships with companies that can get into production. There's some certainty around being able to deliver yellow cake in a can for them. And I'm just, and there's not that many players that seem to be focused on that game, right? Because you've got a whole bunch of explorers doing their thing, and that's great for discovery and great for headlines. You've got people sort of rolling up assets, or some people rolling up assets currently. Again, great for headlines. But this supply-demand dynamic is not changing. As you say, there's a massive deficit coming down the line. And the industry is going to need people who can actually genuinely produce. And do you feel that investors should be looking at companies like that? Or just is it part of the mix? It's okay, there's a market game, and then there's the reality of actually producing yellow cake. Do you know what I mean? There seems different ways you can invest.
Yes, I know what you're saying. I mean, you can't fault the people that are building an asset strategy and people they just want to trade around the assets.
Part of the game.
You put a pile of pounds in a warehouse and create a security around it. I mean, we have two of those now. So you can't fault people for doing that. And that's actually been a very useful vehicle to have for the construction of our market, to be honest, in terms of, and we could talk about that with what Yellow Cake just did and everything else. So, that's a strategy. If you ask about with the development companies, I mean, typically it's what are you going to do? Are you going to build or sell, right? And like I said, in gold, that's a very clear choice. And you really have a lot of choices there probably. And probably they lean more to selling because there's so many more people to sell to. In uranium, I think you have to be more, are you going to build, or are you going to get together with another group that's capable group where you've got some complementary assets that make sense. You've got plausible management folks, like you mentioned, folks like Paul, that obviously have experience, and if they're in the team, their thing is going to get built. So that's definitely a strategy, and that's certainly what I look at it. Yes, that's one of our opportunities, obviously, and there's a couple of obviously M&A things that could be potentially interesting in terms of making a bigger and better company. But it's also, you don't do it at the bottom of the market. Yeah.
Well, but so everything's relative, isn't it?
Well, yeah, but you're trading for someone else's assets, and so it always does matter what you feel about your assets versus what you're trading for, because you don't want to trade for a boat anchor or a company that's got a couple of boat anchors on board, because they're going to weigh you down. And if they're acquiring you to backfill their market cap, that's probably not good for your shareholders. And those things in business happen all the time. The acquirer companies, the roll-up companies, that's what they have to do. They have to keep, it's like roll up or die, right? I mean, you've seen it in lots of different industries. You can't really do that in uranium. There's not enough stuff to roll up, for starters.
It's kind of interesting to me. If I'm an equities buyer, I would think, but who knows how they think? But I would hope that they'd be looking at the market and going, who can genuinely produce here? Because as an investor, in a very meaningful way, I don't care if the company's going to get into production as long as they're driving the share price, because that's how I make my money, right? But if I'm an industry insider looking at where are the actual pounds coming from, it's a very worrying landscape at the moment, because it seems like the spot price or term contracts will need to be signed at $65-70 for any of these things to have any chance of economic success, and or incentive, quite frankly, to get into production.
Yeah, well, I don't know, price aside, I think you do have to look at the assets and say, are these assets that are commercial at a level? Because when the right conditions develop, the market has a way of making sure that that company will get sold to a company that has the ability to do it if you care about the talent. But I would always invest in the asset first before I'd worry about having a team. Because, I mean, the uranium business is a perfect example of that. If you had the world's greatest team for the last 10 years, you produced absolutely 0 pounds.
Yeah, well, I think John Borshoff would say that the talent is leaving the sector as well. That's another conversation for another day.
That's a problem. No, that is a problem. that's another reason why you may have combinations of companies, because there's a limited pool of ability of people to actually get things done. I mean, and Ranger, I mean, take Australia, for example. I mean, they don't have very many producing mines. Ranger is now really closing. I mean, and they're not only closing the open pit, they sealed up the decline. So that's a thing where I don't think they were kidding, or at least that's not something that's, if they wanted 65 tomorrow, because that's, people forget about that resource. I mean, that's a big resource that's already drilled out and everything else that could come back in, and there's a plant there and what have you. But, sealing the decline is a pretty significant signal that you're not doing anything anytime soon.
You said you'd talk about Yellowcake. I'll come back to Yellowcake. Obviously they've taken up their option with Kazakhstan on that 100 million, I think, pounds, as in pounds sterling, option to buy at it's sub 30 type level. Were you surprised it took that long for them to kind of get their act together? Did it need that bump in the market for them to help them make that decision?
Well, that's the way this dynamic worked the last few times. And they weren't there the last time. We just had, we had UPC, and UPC would go to a 5-10% NAV premium. They would go and they would raise the money, and then they would go into the market. I mean, it still helped their overall situation. The Yellowcake contract apparently is pretty interesting in that they can actually secure the price before they have to commit to getting the capital, so the investors really know what they're getting. I have my own little take on how that's good for the market, though, because it's strange that Kazakhstan, because these are 3 million pounds coming out of Kazakhstan, that when you think about it, why are they doing it? Otherwise they would be in the market anyway. So it makes no sense. So I'm thinking that the two duopolists, Cameco and Kazatomprom, who both have taken operations down and production down and have both said we want to be in the spot market, they can't really be seen marking up the spot market $3 a week. And so this is a very good way for them backdoor to have someone else do it and have no fingerprints on it in a way, and get this move up, because it's almost like these utility managers are like kids on their first bike with training wheels, and they got to get the training wheels off, and let's get this market to $40, because if they don't do that, there's going to be no uranium in the future. So I don't know how, I just don't know how we get resolved and the spot market moves to $40, $45. It clearly has to get there somehow. And there seems to be zero urgency on the part of the people that actually need it. And then they need it in the not too distant future to sort of get on with it.
Well, with I guess 2.5 years worth of inventory, maybe they think they've got a bit of time, and
But then what?
And I know. And then what? Because mines take a long time to get into production. Not just the companies in care and maintenance at the moment, but I'm talking about new mines. Former producers need to ramp this up, but they need to be incentivized. I get all of that. It's fascinating times, right? I think it's definitely fascinating times. But we all buy into the thesis that the macro says there's going to be an uptick, and at this rate, that the hockey stick shape, or the curve is turning hockey stick shape relatively imminently, I suspect. Well, let's see where that ends up, because none of us have called it right so far. You continue buying. Why?
Cheap.
That's it.
What else is I got some things dedicated to parts of the portfolio that aren't 10x. So if I have some 5x, 10x money, I mean, at the end of the day, it's pretty good. I kind of want to keep my ownership around 10%.
Right. Why?
I don't know. It's a
Magic
nice
number?
signal to the shareholders that you're committed. Easy math.
Easy math. Okay, I'll go with the easy math. I like that. Right, and I want to be clear. So, no imminent financing for you. Pointless. Is that your attitude?
I didn't say it was pointless. I think we've done previous financings where the follow-on financings are baked in the cake, called warrants. Those warrants are, if they don't get exercised, they're a big overhang because they hold the market back. And so I think I want to wait and see what happens with that. And we have a whole lot of those that burn off by January of next year. If the market were suddenly a lot closer to the peer group, I mean, maybe. But again, if we had the money and we took 10 million, the 10 million would just sit in the bank. It's not like there's an imminent urge for us to do a whole lot. And we probably wouldn't do a whole lot other than what was planned anyway. We also have, which people probably don't realize, we had one particular investment that because we were in crypto. We started a company. We had this company Con, right, that was also in the uranium business in Mongolia. That's a whole long side story about what happened there, but it ended up working out well, and the company got paid out for having its asset taken from it. And then we turned it into a shell, and that went into crypto, and it's gone up 6 or 7 or 8 times. And we had a big position. And so, yeah, we get by on that for a while. And we've still got a lot of value, a couple $1 million of value there probably. And so there are other things. So the people thinking, oh, they must finance. That's sort of the people on the other side of the table. They sort of wait for people that they think are desperate to finance, and games get played, and there's the illusion of overhang, and you must rip off the Band-Aid and suddenly the beach ball comes flying out of the water. But that's not really the case for us. They don't believe you when you tell them that, and then you tell them it repeatedly, and they still don't believe it. And so finally, it just goes up anyway, and then you finance, right? So I mean, most companies that are clever about financing, they're typically not telegraphing what they're going to do anyway.
Yeah. Oh no, we've had that. I've asked people point blank, and they've said no, and the next day they've done one. Literally the next day. Could have just take me over the wharf just for this conversation. Right. So let's talk about some of the assets here. Okay. In the US, I think last time we talked about tolling, and there were going to conversations needing to happen around tolling. So have you advanced conversations with other parties? I get that you're doing the what you had planned and the minimum sort of amount on the projects, but are you having conversations with other people? It's not in the context of consolidation, etc., but relationships around tolling.
Around toll milling?
Mm.
No, I mean, the one project we have that's really below the radar, we don't even talk about it, is LaSalle in Utah. It's permitted. That can go into Energy Fuels' mill. I've had some conversations with Marc Chalmers over the last year, but frankly, really not about that, because I just know at $27 he's not turning the mill on. In fact, he's really got this focus on rare earths because he's got a plant that's capable of producing there, and it's certainly an area. It looks like it could be quite attractive. So I do think at some point when the price gets up and there's clarity around exactly who can bid in or how this whole reserve thing is going to work, where the government's actually going to write you a check in some fashion for what you produce, I think those discussions probably would start, because that's the obvious place where that material needs to go, is his plant. And we have a ore body that has no vanadium in it, so he can run that without running his vanadium circuit, because there's some other things on the Colorado Plateau that have a lot of vanadium in them, and that's the beauty of that mill that he has. That's why he can produce rare earths and other things. He can tweak the mill and get some other things out the back end of it. And so, no, we haven't really had those conversations yet, because again, the price is too low. That's an asset that needs at least $50 before you're probably really serious about it. Yeah, I mean, the ISR stuff, it's too soon. We first just got to get our permits, and that's the goal there, is just get shovel ready.
Right. Okay. So, but you feel Marc well enough for at the time when you have a conversation, he's listening. Yeah. Okay.
Well, I know Marc very well, and I knew his predecessor Steve well. We had an actual tolling milling contract from 2013, 14, when we thought we were going to have, when we saw the light at the end of the tunnel, and let's get ready. And so we have a toll milling contract basically done, sitting around somewhere and ready to go. It just needs to be tweaked basically on how that would work. Now, not necessarily going to do that particular deal again. It depends on what he wants to do. He owns a mill. But he I don't think he's going to start that mill until he sees enough longevity in the price and enough solidity behind the who's buying and where he can offtake the stuff to and everything else, but that he will actually turn the mill on, because he's not going to turn it on for 6 months. I think he wants to, when he turns it on this time for uranium, I think he probably wants to turn it on with a plan and leave it on.
Yeah, no, it's interesting, because we'd spoken to a bunch of CEOs who were sort of going, oh yeah, no problem, it's definitely happening. We'll be tolling it at White Mesa. And I sort of speak to Marc, and he goes, never spoken to them. Don't know what you're talking about. So do you know what I mean? That's what I'm saying. It's
right.
No, relationship. That's why it's.
No, I haven't. Right. No, I know Marc. We were on a. The only other podcast I've done or anything in the last year is with him. He did something to talk about his. It was really more about the rare earth business and what have you. That was about 2 months ago. But I know him very well going back to Australia in '05.
Yeah. That's different from, I think, some of the other CEOs perhaps are making claims that they can't deliver on. So just to finish off, just want to understand where how you move the ISR projects forward, because obviously it takes some planning, some testing. We've seen what's happened with Peninsula recently. They've kind of set back their ISR project by 6 months because they're not able to extract at the rates they thought they would be able to. It's a fairly low grade project. So it's low grade uranium. He's a good guy, but it takes time. So are you doing the things now that you think you need to be doing to kind of hit the floor running if the price does move sharply?
Yeah, we're trying. We last year was frustrating because we got so little responsiveness from governmental officials. In order to get the permits we need to get on with, first we need to do a drill program, and then there needs to be a technical program around restoration, because we have to demonstrate restoration in the lab, in the well field, in the aquifer, to a level that they will give you the final permit. That's the one permit we need in New Mexico. But until you have all your permits, you don't have your permits. And so that requires some work to be done, some drilling to be done. We need access for that and what have you. So just getting the basics so you can go out and then do the work has been a frustrating exercise in New Mexico. I do think, and it was COVID, a lot of it really was COVID related. There were towns there that were literally closed down, where outsiders couldn't come into and what have you last year. And I think they're still pretty concerned about it. So I think that'll be one of the last states in the US where they are running around freely with saying, okay, COVID's in the rearview mirror. But I think we'll get it done this year for sure. And in our assets in Australia, we have plans ongoing right now. Like there's meeting dates scheduled to get the permit in our hand to allow us to go out and do the work. So you'll see us on the ground in Australia, probably starting in the territory no later than probably around July. And that's exciting. So we do have a big greenfield thing there, because we talked about news flow. I'm not a big proponent of news flow for news flow's sake, but that's a big greenfield asset right next to our main brownfield asset. I mean, relatively speaking, same geological belt. And I think if we started hitting something interesting there, people would get excited. By the way, people's got to start doing greenfield exploration in this business again, because we will ultimately need the new ore bodies.
Brilliant. And just talk to me about Australia, because obviously we've seen in Western, I know you're in the Northern Territories and over in Queensland, Northwest Queensland. We've seen in Western Australia a sort of Labor government which does not very pro-uranium, not pro-nuclear, not pro any of that. And that's it's perhaps causing people difficulties around permits. What's the attitude in Northern Territories and Queensland?
Well, the territories is good. The territory is fine. They obviously had Ranger and their biggest producer. We've been through the whole political cycle in Australia, so we understand it very well. So it was actually Queensland and Western Australia had Labor governments after they got rid of the federal objections to uranium, which are completely gone, and they're now introducing the idea of nuclear energy into the conversation slowly, carefully in Australia, with the view that eventually maybe that would happen. And as far as mining uranium, they had this weird thing where, it was okay to sell to other people. We're not going to do it ourselves in these two states. That's a political calculation relative to their voter bases. And it still exists in Queensland. So we're hopeful, and it went away at one point and came back, and we're hopeful it'll go away again. Or the idea that nuclear is ESG friendly will just blow away all the opposition once and for all. That's the other thing. But what happened specifically with Western Australia is they had a Labor government. It went out, I think, in 2009. Then they had 2 terms, so 2 times 3 years. So everybody got everything permitted in 6 years. In Queensland, we had 1 term, only 3 years. They didn't change it till halfway through. So we started down the track, and then they flip-flopped again. And so everything's permanent in WA, but needs higher prices, potentially really much higher prices. Like $60 would be my just personal opinion on what it probably needs at least. And, Queensland needs to get rid of the idea that you can't build a uranium mine first, which I think they will. But at the end of the day, the last cycle we traded with both the state level and the federal level saying you'll never mine uranium here, and went to 700 million market cap. So it's really a discounting factor on, we have this asset that clearly is an important asset. What discount factor you want to put on it? Right now, they're putting like a 95% discount factor on it. what'll happen in the bull market is that discount factor will just recede about the future. It's like about how many Teslas you're going to sell in the future. At the peak, there's zero discount on it, right? It's all going to be Teslas. I don't think it's going to be quite like that in uranium, but there are no uranium companies, remember? So the concentration bet in the market flowing into the money this time around, because there are only 20 names, at least at the beginning, is going to be powerful. And because the 20 of us that are left know where all the assets are, we know there actually aren't that many. They're not going to suddenly see a uranium company every week like you can see a crypto company or a marijuana company, for example. There's something that's because there's probably nothing more ubiquitous than marijuana growing if you want to start marijuana growing, right? Like, I mean, it's very easy to create a plausible marijuana company. It's going to be much harder this time to create a plausible uranium company.
That's what concerns me. It really does. I think
that they'll be suddenly.
Well, that there will suddenly be
in the world that people.
There'll be 500 uranium companies again, and about 20 of them that will ever produce anything, as per last cycle. Well, not it was less than that. I think we got one new producer in the market last cycle, didn't we?
Well, but we rely on folks like you to be sort of the honest arbiters of calling people out on. Okay, when they come on your show and I've got this great new story and it's a greenfield story, and because where did this come from? The thing about the last cycle is the last cycle was so far after the previous cycle where a lot of things had been discovered and there was a lot of data. So that was the cycle where every brownfield thing moved into visibility in a public company. You can't do that twice. And there are no other things lying around that people mostly don't know about. So I mean, to their credit, the folks that did well this cycle, they went out and they found brand new things in Saskatchewan, right? I mean, those were targets that were known, but there were no discoveries there. And there aren't any big brownfield things lying around in companies or countries that for the most part, people don't know about. And so I think that is a bit of a governor on it because it's also, you know, we've been in the exploration business for a long time. And I would say the basic act of just going out and exploring and being able to put a drill hole somewhere from a regulatory standpoint around the world today compared to 10 or 15 years ago is much harder. You can't just start a company in January and you're drilling in April anymore. It just doesn't happen. So,
yeah. We've seen a lot of sort of new entrants, we've seen Australian companies picking up American assets and starting to talk the public market story. And it's, I think it's worrying because we already know those assets didn't work last time around. They're not going to work this time around. And I just feel that there's a lot of retail perhaps going to be persuaded that they need to part with their hard-earned dollars and give it to some guys who know this thing's not going anywhere. And I think that's, as you say, it's our job to maybe point to those things a bit more. But look, Marc, awesome. Always love talking to you. Very frank, to the point. And I think a lot of people appreciate that. And we certainly do. So thank you for your time today. Stay in touch. Hope things do start moving. And you must come back on soon.
I will do, Matt. Thanks. I always enjoy chatting. And thanks for the opportunity. And we'll see you soon.